Welcome to the Alpha Wolf Impact Club. I'm Tim Weintraut, and this is where we shine a light on small companies with big ideas. Our mission here is crystal clear. We want to identify, support, and champion game changers. Those companies that are tackling massive challenges, revolutionizing industries, saving lives, or making us more efficient. For example, today we have CEO Jason Katz of Intelligent Protection Management Corp, IPM, which happens to be the ticker symbol. IPM is a managed technology solutions provider focused on cybersecurity and cloud infrastructure. Provides dedicated server hosting, cloud hosting, data storage, managed security, backup, and disaster recovery, and other related services, including consulting and implementing technology solutions for enterprises and commercial clients across the United States. IPM sells and provides a range of IT related services and goods, including the following: managed IT security services, professional services, procurement services, secure private cloud hosting, managed backup and disaster recovery, and web hosting. This is an impact company as we move further and further into AI and the expansion of data centers, but I'm going to let Jason tell you more about that in just a moment. This is not to be taken as investment advice. I am not a certified financial planner. This is for education and entertainment purposes only. I encourage everyone to do their own due diligence. Hey everybody, Tim from Alpha Wolf Capital coming at you with a brand new company, brand new story. I think it's I would say undervalued at its current share price. And I met Jason. Let's see, how long did I meet you, Jason? It was actually longer. I met you maybe a year ago.
Yeah, something like a year ago. I think that's right.
Yeah, and I really enjoyed the conversation with you. And then we just recently reconnected again. I said, this time I'm getting you on, right? Interesting story. You have a very, I think, interesting background, and it entrepreneurial spirit for sure, right? Yeah. So why don't you do me a favor? And the company is Intelligent Protection Management Corp, and it's well, I'm going to let Jason tell you what exactly they do. But Jason, give us a little background on yourself and how you got here first.
Sure. I'll do the short version because the long version might take a while. So, how I got here is a little interesting. I was a pioneer in real-time audio and video on the internet. I was an early adopter of instant messaging in the 90s. And actually, in 1998, it just occurred to me in a moment that why were people typing messages? They should be doing it with audio and video. And that sounds like nothing today, but you got to remember it was a dial-up world. You didn't even have USB ports. You barely had cameras. So it was way, way, way ahead of itself. It was 5 years before Skype even existed. So it was a very good idea, and I self-funded the company, and we made a piece of software that was called PalTalk, PalTalk. PalTalk.com actually is still there. Anyone can go see it. And it allowed for real-time audio, video worldwide for free, which again turned into Skype, turned into WhatsApp, turned into all the things that we've seen today. So that company did very, very well for a long time through the 2000s. We acquired some patents as well that we ended up monetizing. Microsoft licensed two of the patents. Sony and Activision licensed two of the patents as well. I rolled up some other companies that were sort of similar. And life was honestly pretty good. We took money in from SoftBank at one point in 2004, a long, long time ago. There had been no marketing in the company for the first 6 years. So we got to the middle 2015, 16, almost 20 years in the world. Yet my shareholders, investors, had no liquidity. So we decided to, I mean, it's very rare you have a company that just lasts that long, that's an Internet 1.0 company. They sort of either get bought or they go bankrupt. We actually made money. So we decided to merge into a public company. It was a dating business. I thought maybe there was some good overlap between dating and instant messaging and video. Um, we were 80% of that new company. It was an OTC bulletin board company, so it did trade. The idea was to uplist to the NASDAQ. Fast forward a few years, the dating business was terrible. Their business was terrible. And we got rid of that dating business. We renamed the company PalTalk, which is what the core product was anyway. And lo and behold, a couple of years later, 2021, we uplisted to the NASDAQ. And by the way, did that mostly organically because we made money. So one of the ways you can uplist is you're profitable. We did raise a little money, which again, most companies don't do that.
No.
There's three different tests. So anyway, we got to the Nasdaq. That was great. By the way, the stock when we did uplist was $3 a share, a dollar higher than it is now. But it went on a very wild ride up over $10. It became a little bit of a meme stock for a little bit. Can't actually tell you why. We did a secondary at that time and raised some more money. So we had this very big balance sheet with over $20 million on the balance sheet. And that was great, but the core business was shrinking. So that's going to bring us to current day. I was looking for a big acquisition and I looked at lots and lots of things. I thought I would do something that was app based, sort of like PalTalk was. And PalTalk, again, is on in the App Store if anyone wants to look at it. We ended up buying what is now IPM. It was called New Tech Technology Solutions. It was a great acquisition for us. It was really more than two times, two and a half times our size. And we did it by only giving away 30% of the equity in the business. So we gave them PalTalk shares, 4 million shares, and $4 million. And we ended up with a business that was two and a half times bigger. The IPM business had been called New Tech Technology Solutions. It was a subsidiary of New Tech Bank. New Tech Bank became a bank and was forced to divest their technology arm. This was their subsidiary that did all of their hosting and processing, everything that that public company does, which is a $300 million company, runs through us. So we have private cloud, public cloud. We'll host. It's really a managed hosting business and a managed security business. Those are the two main focuses. Also backup and disaster recovery, also some web hosting. But what we've figured out is that the managed hosting, and by the way, we just saw this in the world. AWS had two big outages recently, and a lot of public facing apps were down or not working. You avoid that in the private cloud. So we have two data centers. Some customers prefer to be hosted in the public cloud. That's okay. We'll manage their infrastructure there. But we also host a lot in our own private cloud, and we have a lot of excess capacity. We have a lot of excess computing power. So it's a good business. The quarterly results came out today. They showed 9% sequential growth in revenue, which is pretty good quarter over quarter. Small EBITDA loss. So we've consistently said we're going to get to EBITDA positive in 2026, and we've been on that trajectory all year. We have $8.3 million in the bank and no debt. So we feel like it's a burgeoning, growing area. And the one other metric that we just came out with for the first time that we'll update every quarter is devices under management. So we have about 9,000 devices under management across all our customers. It's a good metric because if I just told you how many customers I had, I could gain three and lose a big one and actually lose a lot of devices. So it would look like I was gaining customers, but I'm not. So the devices under management number is a really good one, and that's the way we're going to report going forward.
Okay. And when you're saying devices, what are the devices?
Devices are computers, laptops, servers, phones, whatever it happens to be. Anything, or it could be a router, it could be a switch, anything that has to do with a customer that's connected to the internet effectively.
Okay. And then with this blitz of data centers, is that good for you or bad for you, or is that nothing?
No, I think it's generally good for us because there's not enough data center. I mean, you can see that in the deals that have been done. They're paying extraordinary prices. We don't own data centers. We have long-term leases, but
Okay.
we have a lot of excess capacity and space and power, all things that are in high demand now. So, yeah, I think generally it's good for us.
Okay. So you don't own the data centers. You okay. So what you own is the software?
No, what we own is the customers, honestly. So we're as good as our people. Our people are very smart people. So we target small, medium business in various verticals like financial services, like New Tech Bank, which you need special certifications to do, private equity, law firms, accounting firms, sort of companies that couldn't do this on their own. They really need to outsource to somebody like us, and they need to run their business because if they try and do it themselves, they don't do it well. You know, they'll
Right.
have one or two people and they'll get breached, they'll get ransomware, something bad's going to happen. So that's our pitch. We're sort of high touch, high service, US based. Account manager answers the phone 24/7 in English, and we don't lose customers because of that. You know, it's anybody will pay anything once they've been breached, once there's been a problem. So the
Right.
idea is to stop them from having that problem. So I like our niche. Um, I always get the question, why doesn't somebody just go to AWS? Why don't they go to Azure? Because, and again, I was a technology company before. I was an AWS customer. Then we actually moved to Oracle, which anybody who's watching the market knows Oracle's made great inroads. They, a few years ago, said they were going to get into the same cloud business that AWS and Google and Azure are in. And they were doing that by saying, we're going to save you 40% on your bill. We actually switched to them as PalTalk because of that. The problem is that unless you're a technology company with a lot of resources on hand, you can't run your instances at AWS. It's like self-serve. You walk in there, it's kind of like a Home Depot. You could die before anybody would actually help you. I don't know if you've had that experience, but I have. That's what it is when you go to AWS. You're on your own. You either know how to run or you don't know how to. You know how to spin up an instance, you know how to move data around, or you don't. Most companies, small, medium business, don't. They
Right.
need us, and that's our niche, and that's what we're doing. And then I'd say the other thing that's really important is most of these providers, which are managed service providers and managed security providers, they're small. They're very local. They're very regional. They have to put people on the ground in their customer's office, so they have to be small. We are national. We have a good solution. We can put somebody on the ground anywhere in the country in 2 hours. And that's a great thing because it lets us have, a much larger base. So it also gives us the ability to buy some of these smaller businesses, which are basically lifestyle businesses. Nobody's ever going to put a multiple on a business like that. They can't because it's too small. Those are usually LLCs. There are a few partners. They all take the money out of the business. So I think I can roll those up and make our $25 million dollars into $100 million dollars with, 15, 20% margins. And that's really what the story is.
Okay. But you also have another kind of a lottery ticket.
Yeah, yeah, you could call it that. But so the company owns 8 patents currently. I mentioned that we licensed two of them to Microsoft and Sony and Activision Blizzard in the past. Those patents are long expired. I've been in business so long, patent life is 20 years. So I told everybody I started in the late 90s. We're in 2025. So a lot of those patents expired. But one particular patent, we sued Cisco WebEx for infringement in 2021. We ended up at trial in the Western District of Texas in 2024, and the jury awarded us $65.7 million dollars. Uh, Again, we've said everywhere that we, as a company, will get no more than a third of whatever we ultimately get. There is post-judgment interest that runs every year too. There's appeals, there's everything else. So that case is currently on appeal. If you look at the fundamentals of the stock, I'm sure you'd agree with me, it's not reflected in our value at all. But if you put 20, $25 million dollars on our balance sheet beyond our 8 million we have, I'm sure we all agree that that would be impactful, on the stock. But I don't think this story is about that. I think it's about the managed security and the managed hosting story, which is just growing everywhere. And this company, by the way, we rebranded it. So it was NTS, it was a subsidiary of Newtek. Intelligent Protection Management, I managed to get IPM.com, which was great as a URL, three symbols, great. Also, we have the ticker IPM. So I'm having to evangelize and tell the story. It is a lot of work. It's an unknown company. I mean, what
Right.
NASDAQ company do you know that has $8 million dollars on the balance sheet, no debt, and $25 million dollars of revenue? And trading basically for in the mid 20s, less than one times revenue, pretty much, with that lottery ticket that you're talking about. So, yeah, there's a lot of positives here. We've grown the revenue quarter over quarter the first three quarters, and I'm proud of that. And that is our goal. Continue to build the top line, continue to get to EBITDA profitability, roll up some other things, and just become a much bigger version of what we're doing. And we have a national platform and a NASDAQ listing to do that. So I think we're going to do it.
And I think you are too. You're a very transparent guy. You come off as a straight shooter, right? And you've got staying power, right?
I think that's right. And also, I own still a significant number of shares between myself and my family. It's about 25% of the shares outstanding. So,
How many shares outstanding are there fully diluted?
13.2 million. That includes 4 million that are with Newtek. So I told everybody before that we gave Newtek 4 million shares. So we had 9.2 million outstanding before the acquisition, now 13.2. Those 4 million Newtek got are preferred, not registered. They convert one for one into common, but they're not registered. It was part of the reason I liked the deal too. It wasn't going to be immediate overhang of stock. I think that Newtek likes this business, always liked this business, didn't want to sell it, but had to sell it. So
Right.
it was a good opportunity for us. And so, yeah, myself and my family own still around 3 million of the shares. So that's how I got to the 25% number.
Right.
It's quite a lot. And I'll just note, and anyone can see this, I've never sold a share, not one.
That goes back to the transparent thing, right?
Yeah,
So,
well, maybe I was dumb. I had also alluded to the fact that the stock was $10 at some point in 2021. You can look at the chart, you'll see it. It was just a vertical, straight up, but it had some staying power. But yeah, I'm in this for the long haul. I did this as a labor of love. I built this out of an idea in my head. And now we're a NASDAQ company with, a run rate of 25 million of revenue with $8 million on the balance sheet and some patents. I mean, I like where our business is, and it's developed over a long period of time. I'm watching the technology develop. I'm watching AI. We didn't mention that in here, but if
well,
you
we're
look
about
back
to.
at, yeah, at
I was
our
gonna
news
just tell you.
releases,
Yes, go ahead and talk about the AI piece.
So again, we don't build AI, we don't build software, but it's obvious that AI is a huge thing now. So the question was, what could we offer to our customers that would have real utility for them? And so it's in our press releases, I think from about a month ago, we launched a partnership with a company called MindsDB, and MindsDB makes an AI solution. It's very elegant. it's the reason it compelled me was I'm the CEO of this business. If you asked me who are my top 10 customers by revenue in 2024, I can't tell you. I have to ask somebody, and then they have to ask somebody, and then they got to go write a query, and it's going to take me hours to go get that data. This solution lets me query that into a browser that looks like a Google search, and I can ask it that question, and it'll give me the answer immediately. What is that worth? I think it's worth a lot. I think it's worth something to me. I think it's worth something to all my customers. So that was the pitch. These guys have good technology. It's not, when you think about it, it's not like mind breaking, amazing uh, in its core, but what makes it very good is it assimilates data no matter where it is. So a lot of companies will have multiple databases and multiple types of databases. So somebody could have a SQL database, somebody could have a MySQL database, a MariaDB. There are many databases. How do you marry all that data and how do you make it queryable quickly? And then how do you do it in an English language search that makes sense? And that's what AI is. It's large language models. When I type that question that I just had, who are my top 10 customers by revenue in 2024, it understands it at a level where it's going to give me back a relevant answer. And that's what this company has done that's AI and it's smart. So, I really like it. I think it'll be good. I think it'll be good for us. I think it'll be good for our customers. And we have customers. That's what's valuable. These guys have technology, but they don't have customers. Unless you're talking about NVIDIA, or the top, or OpenAI or the very top guys, there are other solutions out there, but how do they sell them? I mean, they don't
Right.
get funded like that. They're just not, it's not of the same caliber. So it's a long, it's a long marathon. It's not a sprint. You have to be judicious and smart about what you do. We all have limited resources. You use them in the best way possible. Hopefully, you grow your revenues, you grow your profits, and then you keep going. And we have a NASDAQ platform to do that on.
Yeah. See, and I mean, this is in this day and age, though. You've got, especially the younger generation, right? Everything is instant gratification, right? Everybody wants, but that isn't real world stuff, right? I mean, you're not there. I'm not going to say it never happens. There, of course, there are those rare examples of an overnight success, but most overnight successes are 10 to 13 year overnight successes.
That's 10,000 hours, right? That's nobody just, I mean, even Mark Zuckerberg, it's an interesting example. I like referencing Facebook because it sort of started when I was already going for a while, in the early 2000s. And it took a long time to get it to where he got it. It started as something just for colleges, and that's how people could meet. And they had that famous line where they said it was called the Facebook. They said lose the, it just should be
Yeah.
Facebook. And it took forever. And then you see the AI part of that that Meta is doing. Um, Once you have a large database of people doing something, it gives you great opportunity to keep going. But it tends to be, you know, very hard to sort of launch. And then once you launch, if you're doing okay, if you're making some money, then more opportunities, come around. I don't know if your audience knows, but Apple Computer was dead.
Oh
It was like $3 a share.
yeah.
Nobody wanted the computers. They became a phone company. I mean, completely changed everything when the phone launched. And
Actually, they became the iPod company first,
first, you're
right?
right. Yeah, yeah, it's
Yep.
true. So it's interesting to see how and Nvidia was a gaming company and made gaming chips for gaming PCs. It was,
They
and look
damn
at
near
what it
went
became.
bankrupt.
Pretty much. So
Yeah.
so it's interesting how technology changes and how management, we had this discussion before, you're buying management at the end of the day. what
Yes.
kind of decisions do management make? And are they the right ones or the wrong ones? If they're the wrong ones, bad stuff happens over a long period of time. And if they're the right ones, good things happen. But I like where we're coming from. I think we have a long history of operating. In my prior life, I acquired 6 or 8 different companies. IPM was an acquisition too. So I have a proven track record of that. The patent story is one that was all me from the beginning. By the way, you didn't ask me that. How do we get the patents?
How'd you get the patents?
Exactly. And by the way, I didn't even mention I'm a lawyer by training.
Oh,
So,
really?
yeah, by training, but never by working. So, when I had the idea for an instant messenger that did voice and video, I went to a law firm and I said, I want to patent this idea. It was before Skype, 5 years before. And they said, that's software. Anyone can code around it. Don't bother. Terrible advice, right? It would have been great to file that patent. So what happened was, as time went by, I developed a real business with PalTalk, but we didn't have any patents. And if anybody was around for Internet 1.0, it kind of feels like what's going on now. There were crazy big high valuations on all those internet companies, and then it bust, and everything went down about 85%, including one called Hear Me. And Hear Me was originally started as a gaming company where people could play multiplayer games on the internet, and they turned into phone, basically not phone, but the ability to do audio over the internet in groups. And that's why it was called Hear Me. So they ended up liquidating in 2001. They had 4 issued patents and 8 pending patents, and they sold them, and I bought them. And the reason I bought them was I thought they described sort of what we were doing in a group video setting. So that's where I got the patents from. And then as time went on, I bought some other companies. Some of them had patent filings. They didn't have patents, but they had filings, which I pursued, and then we end up getting them. Some of them we filed on our own as PalTalk. So I just got a lot of deep experience over years. And I believe in patents. Patents protect innovators. The little guy is an innovator with an idea. That's what a patent's for.
You know, I agree with you. I think we're and it is. I mean, the problem with patents is you are putting the whole thing out there for the world to see, right? So uh, then you have places like China that don't really care about your
They
patents.
steal it. Yeah, they
Yeah,
steal it.
they'll steal it in a heartbeat, right? And that's part of the issue that we have today, and where we are as a country and everything that's going on with China right now, right? I mean, we shipped all our manufacturing overseas. We basically strengthened another country to become a superpower and control 90% of the world's critical minerals.
Rare earths, and it's even worse than that because Taiwan Semiconductor is not even China, although China says it's China, and that's where all the semiconductors are manufactured. So nothing works without those if China wants to go invade Taiwan. So I don't want to rain on anyone's party, but there's some potential trauma out there. It's interesting. Obviously, they're making some inroads. It's interesting. The government, currently investing in Intel directly. For example, Intel owned this industry and it's suffered. It's only gone down where
Yeah.
NVIDIA and AMD and everybody else have gone up. And then the rare earths, yeah, they've just recently made a deal. So, yeah, it comes back to what I said about management. You're buying, management that either has perspective or doesn't have perspective. I have, I was there for the beginning of the internet. I was in college and the first PC came in 1983 into my college. It was kind of funny
The
with
fact that you didn't blow up in the dot-com boom
yeah,
and bust, right? I mean, that
yeah.
that was a brutal time in the marketplace. The fact that you survived that is pretty impressive.
By the way, that's why SoftBank invested in me because we came through that actually as everything bust, we started making money. I put in a freemium model whereby people downloaded the software for free and there was an upsell.
Yeah.
and we were cash flowing and making money. And Forbes wrote an article. Again, you could go search it. Jason Katz, Forbes, 2003. You'll see the article. SoftBank and other VCs saw that because I didn't have professional money before that, and they invested $6 million in us. So they said the same thing. And in fact, when I bought them out, because I did buy them out in 2010, the guy said to me, who was on my board from SoftBank, he said, you know, it's just impressive. You've been able to stick around for all these years and make money. It's not the biggest return we ever got, and they did make money on their investment, but it was pretty tough times. 08, 09 was a financial blow up in the United
Oh yeah.
States too, and everything was going away. So we've weathered all of that. We're still here. We have money on the balance sheet. We don't owe anybody anything, and we're in a burgeoning industry. So when I put all that together, I'm still bullish. By the way, I told you I have to wrap this because I
Yeah.
got another one,
I
but
know.
I
I
would
got
love to
you.
follow up with you again, and I really appreciate the time here.
No, we're definitely going to do it, Jason. Look, I this is just the introductory. This is to get you on people's radars. Right now, the stock is sitting at $1.88. You just had a nice quarter. Uh, look, I think this is one that you should put on your radar, right? I mean, and this is my latest thing. I had one CEO come on one time and said, "Look, just see if we execute." And his suggestion was just buy one share. And I thought that was one of the most brilliant, because there's a lot of people in the world, right? If everybody buys one share,
Yeah.
that's not too bad. But one share, what does that do? It makes you pay attention to the story, right? Go to their IR, sign up for investor alerts, and just pay attention to the story. I think this has got a good feel to it. I do think it is in an important sector. I wanted to ask you about quantum computers and if you're scared about that at all, but we'll have to take that to the next time.
We'll take that for round two, but appreciate the time here and look forward to following up.
All right, Jason, sounds good. Thanks, man.
Thank you.
All right. Thank you for tuning in to another CEO interview here at Alpha Wolf Capital. Today we had Jason Katz from IPM. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? While you're at it, make sure you smash that subscribe button. All of those things are extremely important to us here at Alpha Wolf Capital. We appreciate you taking the time to do that. Till next time, stay safe. Alpha Wolf Capital wishes you the very best of success.